Good afternoon, ladies and gentlemen. How's your Monday? Good?
Good.
Monday
Great.
How's your lunch? Okay, just make sure you don't fall asleep for the report presentation. If not, those who come, the gentlemen that fly in this morning will be very sad. They can't leave Malaysia tonight. Okay, cool. So, yeah, welcome everyone for today's event, physical event associated with Digital Innovation Tourism Lab. So before we start, we'd like to have Arifa, the head of Digital Tourism from MDEC, to talk about, to brief us about what we'll be having today, and will share us a bit on the initiative.
Hi, Assalamualaikum. Good afternoon, everyone. Thank you. Okay, thanks for being here today. This is one of the activities under our Digital Tourism Innovation Lab, so which is an MDEC initiative that we've started since last year to actually increase the supply of tourism tech grown in Malaysia, from Malaysians to Malaysians, right? So with us today we have Nick Cox from Velocity Ventures, so he will be doing some briefing about Travel and Hospitality Strategy Investment Outlook Report. Together with us is our MDEC partner in Digital Tourism Innovation Lab, which is 123 Ventures, led by Vikesh and his team. Thank you for being here, our cohort 1 participants, soon to graduate next week, I hope. And cohort 2 is to begin in May, and we are still accepting applications, and we will announce the cohort 2 participants after that, perhaps potentially after Hari Raya. Yeah, after Hari Raya. So without further ado, also I want to thank our colleagues from MOTAC, Ministry of Tourism, who are here today, Encik Fadli. There's also our colleagues from Tourism Malaysia here. And they are our really strong supporters and partners for this initiative. Okay, so I'll just proceed and invite Nick to proceed with the report presentation today. Thanks.
Great. Thanks, Arifa. Hi, good afternoon, everyone. Thank you very much to 123 and to MDEC and everyone involved for inviting us from Velocity here. I'm here with my partner, Bennett Lee. And we really appreciate you inviting us up from Singapore, especially after the Taylor Swift concert, where we where we paid a lot of money to hijack her. We were wondering if we would get barred at the immigration, but they let us in. So yeah, thanks. Great to be here. Can we see that presentation okay? Good. So yeah, we're from Velocity Ventures, and we're a sector-specific venture capital fund based purely on the travel and hospitality space. So we only invest in travel and hospitality startups. And so it's awesome to see initiatives like this lab, which you guys are working on and involved with, because we think that the travel and hospitality industry is such an important industry for the region. And it's an industry where digitization is moving rapidly in a post-COVID world, and to have these kind of initiatives, which is supported by government and organisations such as 123, I think is fantastic. It's great for investors like us because it creates a pipeline of investment opportunities, and so we're really thrilled to be involved in these kind of initiatives. So again, thank you. What we do at Velocity is we, every 6 months, sit down and produce a report about what's happening in the industry, in the travel and hospitality industry, and where we see the investment opportunities. And I think one of the privileges of being a sector-specific venture capitalist as opposed to a generalist is that you get to think very deeply about what's going on in the industry. And you not only have a knock on the door approach, in other words, startups coming to us and knocking on our door, but we also get the opportunity to go the other way and look for startups that we think are solving interesting problems. And so to help bring that together, we do a report every 6 months. And that report is called, we call it SAILOR, S-A-I-L-O-R, SAILOR, but it's a strategy and investment outlook report. And it's quite a detailed piece that we put together. And what I'm going to do today is talk to the two main points in that report. And the first is, well, I'll introduce our firm briefly, but then I'll talk about the state of travel and hospitality in the region and how we see it at the moment in a post-COVID world and what's interesting about it. And then I'll talk about the opportunity for investment and where the innovation is coming from out of that situation. So they're the two things. And then I've left a lot of time for Q&A. I've heard that you guys that it's very hard to get out of this building late. So we've got plenty of time for Q&A. We can go 6, 7, 8, right? We're stuck here. No, I'm only joking. So we do have plenty of time for Q&A, which is good. So firstly, a quick introduction of me and the firm. So I'm an entrepreneur turned professional investor. I started my own company in Indonesia in 1990. That was a long time ago. In the construction sector, built that up over a couple of decades. Have lived in Singapore since '95, and then had an exit from that business. Became an angel investor, and then those angel investment activities, together with Bennett and a few others, evolved into a venture capital fund. So 35 years living and working in the region, which has been a privilege. In total, including the companies that I started and the ones that we've subsequently invested in, done about 40 different investments in startups. And my job at Velocity is to lead our investor relations. And we also lead our corporate partners program, where we work with corporates. One of the things we do at Velocity is, because we see a lot of startups doing interesting things, we find that corporates are quite interested in what we see. So we have an innovation sharing program, a bit like Plug and Play, where we share innovation insights with corporate partners. So I take care of that. So that's my job at the firm. So we like to call ourselves the leading travel and hospitality investor in the region. And we think about the sector in 5 different verticals. So we think about it in the way that a traveller would typically think about a journey. So the first bit is the inspiration, which we call travel services. So that's the inspiration, discovery, booking phase of the industry. Then the transportation phase, which is getting to where you're going. Then the accommodation piece, the experience that would typically take place in the location that you're travelling to, and then finally the food and beverage. So that's the way we think about our industry, is the way that a typical traveller would think about it. And we invest across those 5 subsectors. And when we invest to try and create a reasonably diverse portfolio, we've invested across all 5 of those areas. We have together many years of experience. Our total combined investment value over the years between all of the partners is 3.5 billion. And we currently, in the current fund, have 11 portfolio companies. So that's just a little snapshot. We're a seed to Series A investor, so we would typically invest US dollars 500 up to a max of 2.5 per company. So that's the stage we invest at. And our fund, as I said, we're based out of Singapore. So Bennett I've introduced. Bennett leads the investment activity at Velocity. My brother and I, as I mentioned, we have an entrepreneurial background. And then the gentleman on the left of the screen is Patrick Imbardelli. He was previously the CEO of Pan Pacific Hotels, and prior to that with Intercontinental Hotel Group. So the team that we've got at Velocity is basically the industry guys, the investment guys, and the entrepreneurial guys. So they're the 3 kind of skill sets that we have amongst ourselves. So to dive into the detail of where we think the industry is at the moment. So everyone talks about how are we compared to pre-COVID. And these are a bunch of slides that you'll see, and I'm sure we've all seen these graphs of recovery pre-COVID with the 2019 graph on the left as our benchmark, and then the recovery during the post-COVID period. And I think this is important to look at because the pre-COVID period is really our benchmark, and we're pretty much at around 80+% recovered. In fact, Malaysia, out of all of the Southeast Asian nations, is leading that in terms of percentage of recovery. I think Thailand is at the bottom of that list, and Malaysia is at the top. And the expectation is we'll be through this recovery by the time we get to the end of this year. So it's been a long haul. It's been a very tough period, as I'm sure you guys are very familiar. One of the key things that is missing is the Chinese visitor. India is primarily recovered, but we haven't seen the return of the Chinese visitor in the number that we had pre-COVID. And our view at Velocity is that that's due to a whole range of different factors. It's due partly to the economic situation in China. I think it's also due in part because of their very closed ecosystem in China. It's not easy to reach the Chinese consumer if you're trying to sell to them from outside. They have a very unique ecosystem. And I think there's also a sentiment piece involved here where domestic politics is driving an agenda where being nationalistic is favoured and spending outside is perhaps less favoured. So, there's a lot of factors at play here. And I'm not sure, our view, at least at Velocity, is that these will take quite a bit of time to flow through the system. And we probably won't see the Chinese consumer back at the level they were pre-COVID for maybe 2 or 3 years. Philippines and Vietnam, higher levels of Korean and Japanese inbound. So, that's been interesting, is to see the mix. Where are people coming from? It's all changed. And, Japan is booming in terms of inbound, Korea and Japanese going to Vietnam. So the whole mix and the game has changed. So it's not just a matter of absolute figures, it's also a matter of granularity and where the people are coming from. The Aussies are back in Bali, of course, and the Russians are back in Phuket. Some say they invaded Ukraine, but I think Phuket also had a different kind of invasion. And even despite the arrival of those guys, the Thai numbers are not strong. This is a bit of a tricky one to see, but basically this hex graph here is the forecast for 2024. And if you compare that with the pre-COVID number, you'll see that the forecasts are pretty much looking at the end of this year being back to where we were in a pre-COVID world. So most countries are predicting a full return by the end of 2024. One of the interesting things that we've seen is an increased focus on domestic. So with the change of this mix, governments and tourism providers have said, hang on, we need to be thinking more about our domestic market. Let's not ignore our domestic market. And so that's certainly been something that we've seen. And what that's in turn done has meant that domestic OTAs have had a win. So those who are selling domestically and with a domestic brand name have had a win as a result of the increased focus on domestic tourism, which we think is something interesting. The other factor in order to get back is flight capacity. Our flight capacity is currently between 80 and 90%, and the airlines are loving it. They're making lots of money, but they're not providing the number of seats that they did pre-COVID. So that is also a factor in us getting back to where we were in a pre-COVID world. So just diving into a few, that's the kind of macro, big picture perspective of where we are pre-COVID versus COVID. And now I just wanted to dive into 3 specific areas that we see are quite important as we move through this recovery. The first is sustainability. And I think one of the things about COVID is that it puts sustainability on the back burner. Governments were focused on survival. They were paying out all their money to keep wages being paid to workers. And the whole issue of sustainability, both in terms of the consumer and government regulation, was put on hold for 3 years. That's changed. Sustainability is now firmly on the forefront of the agenda of the consumer and the corporate. And the thing that we're seeing is that the corporate is probably ahead of the consumer in terms of adaptation to this. And there's what we call the say-do gap, which is the preference. And what this graph is trying to show is respondents willing to pay for sustainable accommodation choices. And so what we see is quite a number of people saying, yeah, I'm willing to pay. But then there's a gap between those that actually do. So our view is that that gap over time will change, and that the people who say will eventually start paying. But we're seeing some interesting trends around that. So sustainable accommodation, eco-friendly construction materials, presenting yourself as a sustainable accommodation choice, carbon offsetting, renewable energy projects, these kind of projects starting to come through as a way of presenting ourselves as being sustainable. Wildlife conservation, lots of more talk about this. Over-tourism is a word we hear more and more. And these kind of themes are starting to come through with more vocal voice. The next one is generative AI, machine learning and robotics being used in real-world applications. So we see a situation where we've got generative AI, everyone's been talking about it, everyone's tested it, and now we're starting to see the actual application of this technology. And this is an interesting statistic. 68% of Singaporeans planning to use AI on their next trip. So I think it's moving from being a toy and experiment to something that's becoming part of everyday life. I'll just dive through these. The next one, and this was what I mentioned earlier, I hope you don't mind me presenting about Taylor Swift after our, our Singapore hijack. But this graph here shows the searches that were conducted on accommodation in Singapore after the announcement of the Coldplay and the Taylor Swift concerts. And you'll see these spikes here that took place at the time these were announced. And it's quite amazing, the impact of this. So Singapore secured the Taylor Swift tour. They call it Taylornomics. So Agoda's searches went 160x on the day that announcement was made. And so that was a very, very interesting thing to think about, 160x on the day that it was announced. Traveloka saw a 6x increase in flight bookings on the week after the Taylor Swift concert was announced. And Klook started launching their own packages. They somehow got hold of tickets, combined that with accommodation and started selling packages. Marina Bay Sands was selling packages for $50,000 US for a ticket and accommodation. And a lot of the people were coming from Indonesia, Vietnam, China and other markets. So that's a really interesting trend that we're seeing. So what we try to do, as I mentioned at Velocity, is to think about the recovery statistics, to think about some of these insights, and then pull all this together. And I'd summarise this as follows. I think the industry's changed forever. COVID has just caused enormous change in the industry, and the recovery has shifted everything around. Domestic tourism is a new anchor for the region. And we think that although those inbound numbers are recovering, it's caused a refocus on domestic. And that's something that people are thinking about much more in their tourism planning than they were in the pre-COVID world. Inbound markets come and go. So don't think that our inbound market from China is going to be there forever. These markets come and go. Exchange rates change. Economics changes in those markets. And so one minute we become dependent on a market, the next minute it might not be there. The other one that was surprising is business travel did not die. Everyone predicted that Zoom was going to kill business travel, but it didn't. We're here, face-to-face contact is really important. MICE events registration is up. So that was another surprising outcome in the post-COVID world. Sustainability, as I mentioned earlier, finally getting the attention it needs. New ways of discovery and inspiration. So this is also one of the trends that we're seeing out of COVID, is that people are using alternative means in order to discover and be inspired about the way that they choose their travel. So that's one more. New drivers of demands, as I mentioned, the events like the Taylor Swift, instead of the big resort being unsustainable and overdeveloped. So these are some of the post-COVID trends that we see in the industry, and which I think we all need to think about as we're doing our business on a day-to-day basis. So what does all that mean from an investment point of view? And I think, what's really important, as I mentioned earlier, is that at Velocity we have the privilege and the pleasure of not only talking to founders who find us, but looking for opportunities based on problems and going out and finding founders who are solving them. And one of the things that we do every 6 months is take all of that work that I've just shown you and come up with some key problem statements that we work on ourselves and look for founders who are solving. So I just wanted to lead you through these quickly. And in our view, these are the key pain points that are out there in the industry that need to be fixed and which founders will hopefully be working on. Can you see that okay? Yeah. The first is over-dependence on OTAs and GDS. So we all know the OTA model. They charge 15 to 20%. They then take 50% of the money they make and give it to Google for search. Now, our view is that that's an outdated model. It's actually been around for 20 plus years. And our view is that that's ripe for disruption. And we'll talk a little bit about some of the companies that we've seen who are potentially disrupting that. The GDS system is even older and more outdated. And with NDC, we think we'll see more and more companies tackling the GDSs and trying to break the duopoly that exists there. The next one is adapting to the needs of the modern business traveller. As I mentioned earlier, business travel didn't die, but it's changed. And there's much more combination of business and leisure. There's much more challenge around expense management as a result of that. And the type of business trip that people are doing, the way they want to manage their expenses is different. The loyalty programs that we each have are different. And so the business travel world is not what it used to be, where booking through a big corporate travel agent is the way that it's conducted. So we believe that's a problem that's yet to be solved. The next one is understanding consumer preferences and personalising offerings. So how often have you received a Facebook ad for something you've already bought? Or a Facebook ad proposing some accommodation that you've already booked? And we think that that's also such a waste of digital marketing, and that there's a complete lack of understanding about what the consumer really wants in digital marketing and matching that together with the offering that's provided. So we believe that's a huge problem that's yet to be solved. The next one is loyalty programs. These have been around for a long time. The airlines were the central bank of loyalty points. They survived COVID, and the airlines are still a very major part of the loyalty world. But we do believe that this is an area of managing all the loyalty programs, the proliferation of points, the fact that they are not interchangeable is also a problem that needs to be addressed and solved by founders. We've talked a little bit about generative AI. Taking that from an idea and building it into business processes is also a very interesting problem which we all need to work on. Dealing with a range of technology options. So one of the challenges that operators have is that there's so many founders out there, like all of us, developing new solutions, providing new options for technology. It's actually very difficult if you're an airline or a hotel group to figure out which technology option to engage, how to integrate it, and how to get them all talking to each other. I think the VC industry has left a legacy of so many options that it in itself has become a problem. The next one is the emergence of new distribution models. So somewhat related to the overdependence on OTAs is the fact that we've got influencers and emerging social media apps as the way that younger people are getting inspired. So that's where they go to look for their inspiration about where to stay, what to do, and how to book. And so how do you find the blend of the discovery via social media versus the booking via booking.com? And so that's where I think there's a very interesting opportunity. Responding to new traveller categories, digital nomads, and I know that Aretha and her team have been working a lot on this. Gender groups is another one. So what we're starting to see is travellers grouping themselves by different types of group than we had previously. It's not just school trips, or it's not just old age people travelling. There's new groups emerging which need to be addressed by the market. Decarbonisation, that's another massive problem. I mentioned it earlier. And then finally, new age customer demands. So people are looking for opportunities in wellness, socially responsible, and immersive tourism. So that's a long list, but every 6 months what we sit down at Velocity and do, and I can see you guys taking a shot, we'll send this round. Can we send this round to everyone afterwards? Yeah. And we'll give you a full copy of the report rather than just the summary. But what we see here is a list of problem statements that we think the industry has in a post-COVID world that are enormous opportunity for founders who are working in this sector to solve. And I think that's what gets Bennett and I out of bed every day, is knowing that all those problems are there and that there's groups like you guys who are working on actually fixing them. And that, in turn, because they're real problems, provides a great economic incentive, because if they're solved, there's money to be made. So that's the work that we do at Velocity. Now, what I wanted to do, just to finish, and I'm conscious that I've spoken for quite some time, but I'll just do a quick example of two, I think, very interesting companies that we've invested in that are solving some of these issues. So the first one is regarding new distribution models. And I mentioned before about our view on the OTA model and how we think that it's very ripe for disruption. And so we invested in a company called TripBetos. And what TripBetos is doing is they're a Korean company, and they've taken the concept of social media and blend it with an online travel agent. So what they do is they take content from travellers and influencers that's user generated. So if Bennett's taking a trip with his family, they can take a video at the hotel, they can take a video by the pool, they can take a video of the buffet, they can post that on the TripBetos application, and then there's a booking engine that sits behind that. And TripBetos becomes effectively a social media platform that people scroll through to get inspiration about where to travel with a connected booking engine. When a booking is made, then part of the commission that's earned on that booking is then refunded to the traveller who posted the post in the first place. So what they're trying to do is to remove the expensive digital marketing costs that are associated with the OTA model that drives those economics that I was talking about before. So they're now the #3 OTA in Korea, and just about to expand into Japan. So a very interesting model that's trying to break down that traditional OTA model that I mentioned before.
So when they came to you, what was that stage they were in that made them also investable in terms of trip?
We've been talking to them for what, 18 months? Yeah. But the last 9 months has been rapid, because their brand in Korea has become like a Facebook or a TikTok, but for travel. So people go there and scroll without the intention of booking. So it's become a place to just sort of see what's going on in terms of travel. But I think the environment in Korea is very unique because you have a very low birth rate, a lot of single female travellers, and a very social media inclined local population. And so they love all that stuff. And the postings are amazing. You know, you'd think they're professionally produced videos by just, you know, people who are everyday travellers like you or I. Yeah. So interesting model. And then the last one is the decarbonisation thing. We think this is huge. There's so much to be done here. And so another company that we backed is this company called Carbon Click. And the big problem with decarbonisation of our industry is that we've got a lot of long life assets. So we've got aeroplanes, we've got hotels, they're going to be continuing to emit for the next 10, 20, 30 years. Very hard to decarbonise a plane, very hard to decarbonise a hotel. So what Carbon Click does is they go out and buy carbon credits. So they buy credits from projects like reforestation projects, and they then have a bank of those, which they then make available to airline and hotel companies. So when you book a ticket, you can choose to offset, and your project that you offset against is linked to the destination of your travel. And so that's how they create a connection between the traveller and the offset program. So that's another one that we've done, which we think is quite interesting. So that's it. I'll stop there. I wanted to just choose 2 examples of companies out of that list of projects, of problem statements that we've invested in. And just to wrap up, so what we've seen is a dramatic shift in the industry post-COVID. A whole bunch of very interesting problems emerge from that, and in turn an incredible opportunity for entrepreneurs to go out and solve them, and for groups like us who are serving the industry to either incubate, accelerate, or invest. So I think we're at a very special time in this post-COVID world, and thank you for listening to the presentation.